Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down. Nasdaq is down about 1.5%, as you can see. S&P 500 is down about 0.9% there. Dow, it looks like it's down about 0.5%. Nasdaq did get hit harder. They were down. At one point, I think Nasdaq was down about 2.5% or something like that. But I want to start with the Nasdaq first today. Because it will go back to S&P and we'll look at the S&P 500 65-minute chart. But I want to start with the Nasdaq because the fact that we have island top reversal on the Nasdaq. You can see that back in September 14th, we saw that gap up, and that gap up was sustained, meaning it never was filled. It never got filled. You can see right here. So we held that support for several days or so, and then today, this morning, we gapped down, but we gapped right below this gap up area. So now we can see that there's no hindrance or disturbance in that gap area. So there's totally this gap right here, this gap, they're open, right? They're open throughout, and that's an island gap. Basically, this price action right here in the box, that's an island. So because this happened on a down gap, that's an island top reversal. And with that, we've been hanging around right beneath it. Why do you think so? Well, because on the Nasdaq, there you go. We have that gap area right here that was open back in August 12th. That's the reason why we found support back in September 11th. And despite the fact that we did see that island top, we hang around there above this level. So going forward, going into tomorrow and early next week, we're going to see some battles of the gaps here. And this is something that we actually talked a lot about throughout since the March lows, because we saw a lot of this happening. Because, you know, like March lows, April, May, and June, well, the buyers had to go through a lot of gap downs. Remember in the March, there were a lot of gap downs that happened throughout the March. And then when the market was moving back up, there's so many gaps the buyers had to work with. And so there's so many gaps, or, you know, as we're navigating this market last several months, 4 or 5 months actually, there's so many gaps that we have to track. Now, as the price is coming down, right, you can see that it's starting to find these gap areas again, and those levels acting as support there. Let's actually go to Spider now. Look at the spider. So looking at the spider here, you can see that I've adjusted my moving average just a little bit. This moving average and that moving average there. You can see the settings on the description below of this video. Just to accommodate just this price section here, and just to accommodate this here and here. So what we can see on the Nasdaq, we saw that we found support on the gap area. And then on the S&P, my long-term moving average is finding support here and here so far. But some has asked me if we have the island top also on the S&P. We actually don't, because you can see here back in September 14th, it gapped from here to here, right? So if I draw a line, you can see that it's already been filled. We did gap lower though, below it. It's just that candle right there went up and filled this gap. So they really don't have that island top gap like the Nasdaq. But so far we have the down gap still open. So going forward, it's going to be a little bit hectic because of this down gap. So it's going to be the battle of the gaps. We got the down gap here. We got the up gap here. We got the midterm moving average continuing to decline at this point. And then I got the long-term moving average still rising. And we got this up gaps that the bears have to deal with. So we got the down gaps, one down gap here. We got a couple up gaps. We got the moving average coming down, moving average going up, the midterm here, long-term here, and obviously the short-term in that vicinity. So going into tomorrow, I have to label this market, and we've been labeling this market short-term bearish for a couple of weeks, several weeks now, ever since this thing started coming down here, right? We've been labeling it short-term bearish every day, despite the fact that we saw some of these up moves, right? And this is the reason why, even though buyers try really hard to make these up move here, it just was not getting sustained or finding any kind of traction, because every time we see some kind of a bounce, it looks like some kind of shenanigan gap down. We see another bounce, another down move. We see another bounce, another down. You see what I mean? Things are starting to get a little bit hectic here. So I actually think we're gonna get into a hectic environment. This is something that I've been talking about pretty much every single day this week on these daily videos, that before the buyers find some traction to the upside, we want to see the price kind of getting up here like this, start cultivating higher lows and higher highs, and then midterm moving average kind of crossing back up and price surfing it up. We don't see that. What we see is a lot of choppy price action, not finding lots of momentum here. What we do see right now is actually the sideways move, right? So the sideways move is actually better, because what's happening right now is we're not seeing lower lows from the bears either. Things can change tomorrow, things can change next week. So I think the key levels that we want to really look at going into, probably in the next couple weeks is 343 and 345 about, and 330-ish area. Why? Because who's gonna first do a breakout, either breakout to the upside or breakout to the downside, and start cultivating either higher highs and higher lows, or is that gonna be lower highs and lower highs? Right? Which one is that going to be? And I think that's going to be the very, very important factor going into next week and week after, pretty much the entire month of September. So we're just moving sideways right now. So let's continue to be bearish in the short term. I want to do neutral in the midterm with a slight bearish and hectic environment. Remember back in June, I was talking about how there's going to be hectic environment. I think we're going to continue to get into the hectic environment, probably the rest of this month, which we talked about earlier this month, that probably entire month of September is going to be hectic, the rest of this September here. So there's probably a lot of up and down shenanigans and stuff like that. So bearish in the short term, neutral to bearish in the midterm with the hectic environment we could expect going forward. And long term, still bullish. Long term, I'm still bullish in this market. So that's how we're gonna label this market as of today. And I think it would have been better if, you see this gap right here. It would have been better if we held this level, we kept this gap open. We talked about yesterday on the daily update video yesterday. Maybe it would have kind of hang around here a little bit, and then possibly finding that support and cultivating higher lows and higher highs for the buyers. But the problem is now we got this down gap. So what the buyers need to do is go up and fill this gap quickly. Maybe make that into an island bottom, for the buyers. Maybe gap it up and turn this one island bottom. Maybe then there's a good chance we continue to thrive higher and then do something like that. If not, if we start to struggle though, below this level, this gap area, tomorrow and next week, there's a good chance that bears going to try to fill this gap right here at 330. So still sideways movement, just kind of hanging around here, floating around here. Overall though, the sideways move usually favors the buyers. So bears has to act quickly to break below this support of 332 and make lower low. Lower low, like well-defined lower low. And then continuing that for further decline. But you let buyers hang around here too long, especially because we're still in a long-term uptrend, right? Because we're still in a long-term uptrend, you let bulls hang around too long in this vicinity like this, they will bring it back up. So I think bears need to act quickly to break below 332. Otherwise, I can kind of see buyers trying to slowly find that momentum, potentially trying to bring it back up here. Before I let you guys go, let's look at that oscillator here. So oscillator, you can see we curled down, and ever since then, we continue lower. We didn't see any kind of support anywhere, not here, not here. It looks like it's gonna come back down to oversold level, though. If they want to bring it down more, bears are not tired. You can see that bears got just a little bit more room here if they really want to utilize that. So we're not at extremely oversold level either. But remember, back in just a couple days ago, just yesterday, we were not in overbought level either. 2 days ago, we were not overbought. Actually, there's a little bit more room. Bulls could have made it, utilize that energy to push it up, but just kind of gave up. And so we're here. Looks like we got a little bit more room, but who knows what the bear's gonna do? Just because we're in a more like a sideways range type of price action. So when the market kind of get into sideways consolidation, a lot of times the oscillator is going to be kind of useless at this point. So we'll come back tomorrow night. We'll get a little bit more information, a little bit more idea of where this market is going. We'll go from there. Enjoy your evening. Good luck trading tomorrow.